Welcome to this section. Audit is a statutory requirement, so we're dealing with external audit, but internal auditors can buy into it anyway. So when we talk of statutory requirement, what is the statutory framework within which auditors operate? So this is the next section. We'll combine two sections to look at the standards, which is governing the auditors, and then the statutory requirement as well. Okay, so let's start with the statutory requirements for audit. Okay, so the framework. So you want to understand the framework within which audits are performed, know the limits for company audits, who can be and who cannot be an auditor, and the requirement of the RSB and the qualifying body. And the RSB, I mean the ACCA, ICAS, ICAEW, CAI, okay. Process for appointment and removal or resignation of auditors, rights and duties of auditors and their powers, understanding the basis for auditors' remuneration and appreciating any conflicts between the appointment of auditors by the shareholders and then their remuneration by the directors of management of the company. And we just, if time allows, I think this one you can even read it on your own. Purpose and procedures of the AGM, but we briefly touch it. Okay. Now, statutory audit, who is it for? Small companies are companies who by definition are not large. Now, their turnover is 10.2 million or less. And half of it represent their balance sheet totals, which is 5.1 or less. They employ less than 50 people, okay? The threshold keep changing. So my advice is for you to look at the gov.uk definition thresholds for these small companies and large companies and medium companies. Now, small companies who do not fulfill the first two out of the above three requirements do not have to have a statutory audit. Now, companies who have been or are public company or involved in banking, insurance, financial services cannot qualify for exemption. Okay, cannot qualify for exemption. Okay. Now, the same limits apply to small groups, except that the reference can be made to net or gross amounts and the equivalent figures as we have mentioned above. Okay. So turnover 12.2 million gross, and then balance sheet total 6.1 million gross. Okay. Now the aggregate number of employees do not need to be more than 50. Now groups cannot be eligible for exemptions, even if they are small. Okay, even if they are small. All right. Now organizations that do not need an audit, small charities which are not companies. Okay. So charities which are not companies, annual income of 1 million or more, charities with a balance sheet of 3.26 or more, income and an income of 250 or more. Okay, charities. Dormant companies, they've not been active for a while, are not required to be audited by law. Companies, organizations which are not public, which are not into banking and insurance companies. Now, organizations which are not authorized people or appointed representatives under the Financial Services and Markets Act are also exempt from audit. Now, what is auditor's role? We obtain sufficient appropriate evidence to ensure that the financial statement prepared by the client complies with the applicable laws, financial reporting regulations, or any gaps. Okay. Now, auditor must also have regard to the laws and regulations and the framework governing the company, in fact, the business environment in which it operates. So you must understand all this. So as an auditor, we must always employ what's professional skepticism, where we question anything which does not comply with laws, which does not follow regulations and frameworks. We need those to keep those in mind. So professional skepticism, recognizing that auditor may reveal instances of non-compliance, areas where non-compliance may be possible. So we have to flag all those things out, right? Who can be an auditor? As per the Companies Act 206. This person must be independent of the client and must be qualified member of the ACCA, ICAS, ICAEW, CAI. Okay. CIMA doesn't come in here, but don't be surprised when you get to the workplace and you see that somebody is CIMA qualified and still recognized as an auditor, because Anyone who is SEMA qualified has the technical know-how. I can bet you to be a very good, excellent auditor. Don't be surprised. Now, who can't be an auditor? Officers and employees of the company, partners and employees of such persons or partnerships for which such a person is a partner, people who have a connection with the company or where the company has a connection with an associate of theirs in any description, people who are ineligible to act as auditors of a particular company are also ineligible to act as auditors of a parent subsidiary or fellow subsidiary of the company. So these are people who can't be an auditor. Officers, employees of the company, partners or employees of such persons. Okay, people who have a connection with the company cannot be auditors. And people who are not eligible to act as auditors for a parent cannot be eligible to act as auditors for the subsidiary. UK regulatory framework. So like I said, we have the RSBs who recognize us, okay, as auditors. All persons carrying out audit must have been approved by these authorities, ACCI, CAW, ICAS, CAI. And the Financial Reporting Council regulates corporate reporting and governance. So they help a lot here. Now, these RSB, what do? They ensure and they also put in controls to ensure that ethical rules are kept. They also set up the exams for us, competency, ACC has exams, CAI, ICAW. They all have exams to test your competence. They also always update us on the technical standards. They help with PII, professional indemnity insurance requirements. They monitor the firms, the audit firms, to ensure that they follow the rules laid down. If you have any complaint procedures in terms of ethics, you can consult these RSBs. They also have rules for accepting people and also excluding people. If you misbehave, they can sanction you. They can sanction you, take your license from you for some time. So typically, this is how the structure looks like. At the very top, we have the Financial Reporting Council. And then we have at the next level being the People Committee and Audit and Risk Committee. They are more like the tribunal panel where they review, okay, you could be sanctioned around that time. Then down underneath, we have the Conduct Committee, Supervision Committee, Regulatory Standards and Post Committee, who they enforce. And then we have the Enforcement Committee panel for certain arm's length transactions. And underneath, we have Non-Executive Advisory Panel. Experts will be called upon by executives and committees to assist in that regard. To be in your best interest to find out and better understand how this organogram or the functions of these particular committees work. Okay. Appointment, removal, and resignation. Auditors are appointed by shareholders during the AGM, annual general meetings. Directors can recommend that let's go for these auditors. They can recommend, but shareholders appoint them, right? Same way, you must remove them at an AGM by the same shareholders who appointed them at a vote, using a vote. When you resign as an auditor, you must must provide a written notification and present it at the AGM. Or I don't want to be re-elected, you present it at the AGM. So everything happens at the AGM with the shareholders, right? What's your responsibility as an auditor? You audit the books. The directors prepare the books. You review compliance with the corporate governance code and any other information which you are required to review per ISA 720, other information in documents containing audited financial statements. So if the company has a sustainability report, a CSR report, a chairman's remarks, you have to audit all those things. You must review those. Annual report responsibilities, like I said, is the management who does it, okay? They normally prepare the annual report. You review these narratives to ensure that they are not saying things which are misleading. Now, for listed companies, the requirements are broad. So UK Corporate Governance Code provisions, including board decision responsibilities, audit committee requirements and membership, review of internal controls by directors, you need to review all of these. You must also report on the truth and fairness of the director's remuneration. And directors will have made assumptions that the company will continue as a going concern. You must review that. If they have a strategic report, you must, again, review that. We have what we call letter of engagement, which will set out the terms of the audit engagement. ISA 210. For listed companies, this includes additional reviews. Both the directors and auditors report on their respective responsibilities in their accounts. Now, auditors can report by exception. That is only if something is not done right. So we can always do that. Okay. What about non-compliance? If the UK government governance, corporate governance code is not complied with, you can report on that as other matters paragraph in your report. You can report on that. Okay. Now, the listing rules of the London Stock Exchange requires us to report any instance. This is an example. When the company has not complied with certain disclosures as required or set out the rules. In connection with this, we report in our opinion that the company has not complied with requirements of paragraph maybe 13.2 of those rules because the report on director's remuneration does not report that the chairman has exclusive use of a private jet leased by the company. Other matters, you can report on this. Compliance and internal control. Remember, directors, they are responsible for designing and implementing a sound system of internal control, including an internal audit function. As an auditor, you must understand the client, the entity, the environment in which it operates, and assess risk of material misstatement, as at 315. So the directors are required to do what? Ensure compliance with the laws. You must review whether they've complied. Directors must ensure that they have put arrangements in place to prevent non-compliance. You must review whether they have complied or not. Right. So this is the first part of the statutory requirement, which I would end here. Questions are there. You would want to visit and look at the framework, reporting framework for audit, and then the governing body structure as well. Okay. Now, the next session, we are going to look at standards as well. So we are going to look at standards. The framework is the auditing and accounting standards, which governs what? Audit. It's also quite brief, so that's why I'm joining these two sessions together. Now, let's look at the auditing and accounting standards and guidelines, and what we can learn from that one. Now, in our objectives, learning objectives, we want to understand the development of the international standards on auditing, the role of these international bodies. What about this FRC? Today, it is being superseded by a new audit reporting and governance authority, AGA. What is the structure of financial reporting in the UK? We must also understand the form and content of an ISA and appreciate the publication of the FRC and what they are designed for, as well as explain any relevance of accounting standards to auditing. Okay, now let's hit this. Hopefully, there's no delay or technicalities here. Of course, there are no technicalities. We just have to understand it. Now, with the UK regulation, the Financial Reporting Council, that is the UK version of, they issued the UK version of the ISA. So you can see ISA UK, ISA into bracket UK. And it is supported by the Technical Advisory Group. These guys are responsible for discipline and auditing standards. For audit discipline and auditing standards. They issued a code of ethics, similar to what the ACCA, ICA, ICAS, ICAW issue. They also investigate any issues that amounts to corporate failure. So what is the cause of any corporate failure? And they will report on those conducts. Okay. Now they also issue reports on the audit quality and provide recommendations for improvement. This is typically how the structure looks like as of April 2021. The FRC board sits at the top. On its planks, you have the People Committee, Audit and Risk Committee. And you can see this is similar to what we saw in the previous framework reporting of audit in accounting. Okay, so same structure happens here. So we have the tribunal panel and then the enforcement committee panel. And then they recruit experts at the very base to support any of these committees, the conduct committee, supervision committee, regulatory standards, and codes committee. The International Auditing and Assurance Standards Board. Now, auditing standards are issued by what? The Audit Practices Board, but they are derived from the IASB. IASB is part of the International Federation of Accountants. Now, it has two main pronouncements, the ISA and the practice statements. The ISA is supposed to be implemented in each country according to the country's conditions, but the practice statement provides assistance in implementing the board standards and to promote good practice, right? The International Auditing Standards, it is, the IASB has defined it to be standards which are, it should be international standards on auditing, ISA, but it's the same thing. To improve auditing and assurance standards and the quality and uniformity of practice throughout the world. Why? It helps to strengthen public confidence in the global auditing profession and serve the public interest. So that's why we issue the ISAs. Work of the IASB, they establish auditing standards and they provide guidance for financial audits. They ensure that this guidance will help you to audit at the highest quality. They also establish high quality standards and guidance for audits of other activities or for other assurance activities. Whether you are auditing financial or non-financial data, they are there to help. They also establish standards and guidance for other related services, due diligence, agreed upon procedures, limited assurance, let me put it that way. They also establish a quality controls covering the scope of services addressed by the board, right? And then they regularly publish papers on auditing and assurance matters. So here they advance the public's understanding of the rules of auditors, the responsibilities of the audit profession, and their understanding of assurance services as a whole. The ISAs, each country has its own ISA. UK have theirs. So you see UK, you see ISA into bracket UK. And they are issued by the Financial Reporting Council. Auditors, we audit in accordance with ISAs. Okay, we are bound by the ISAs, but ISAs are simply helping you to check whether the International Accounting Standards or IFRS or the country-specific gaps, generally accepted accounting principles, are being followed. Now, if the auditor decides to depart from the ISAs, he must give a reason why he's not following the ISAs. So I think we end here, and this is a structure you would see. The IFAC is at the top. It has a subcommittee, which is the IASB. And then the IASB has a subcommittee in the UK, which is the FRC. So we work together, right? Other publications, like I said, practice notes by the FRC and bulletins on key topics. They issue those things. These practice notes, they generally relate to specific audits of some specialized bodies such as banks and insurance, but they also provide specific advice on audit issues. Okay, the bulletins actually. Accounting standards. Financial statement must comply with relevant accounting frameworks, IAS2, inventories, or IFRS. Okay. Now, auditors need to be familiar with these accounting standards to validate compliance. So most audit firms will use a checklist to ensure compliance. That is why as an auditor, you must have a better understanding of your accounting standards. Otherwise, what are you going to audit? That is it. We end here. So there's a nice case study from Millichamp and Taylor's book on Zero Limited and Mainbrace Limited. And take it and run auditing firm. But these questions are structured to conform to the ACCA exams questions. So it will be good for you to try your hands on them. All right. I'll see you in the next session. Bye for now.